Hello, everybody. I'm Sebastian from the Carl Zeiss Meditec Investor Relations team, and I'd love to guide you through our investor slide deck to give you an intro into the company. Look forward to future dialogue with you after this presentation. We are a medtech company active in two fields, microsurgery and ophthalmology. More on these later. We have a bit more than 2 billion in revenue and an EBIT margin last year affected by a few special topics of about 12%. Historically, you see that we have had higher profitability. We're also targeting higher profitability more in the high teens area, a bit more on that later in our historical performance. We have strong market positions. We're the number 2 worldwide player in the ophthalmology field. We are the market leader in the microsurgery field. We have TecDAX and MDAX listing, all close to 6,000 employees. And 59% of our company is held by the private Carl Zeiss AG, itself a very well-known optics brand and optics technology powerhouse, a private foundation group behind it. They have been the parent and anchor shareholder of Carl Zeiss Meditec since it has been spun out of that group for about 20 years. Our markets benefit from highly attractive structural megatrends. To just name a few that will ring familiar for medtech investors, and some I think are specifically attractive for ophthalmology. We benefit from demographics. The aging of the population and the growing wealth of that population is benefiting not only basic medical coverage, but also elective premium medical coverage. Our portfolio is uniquely suited to deal with the trend of more myopia among young people, the very high myopia prevalence that we see in the most pronounced way in the Asia-Pacific region today, and also, of course, address one of the constant needs of doctors and medical professionals, which just comes from the high patient flows, from the high volumes in age-related eye diseases that can put a strain on efficiency of the clinics, and in combination with more difficult funding environment, pushes them to seek productivity benefits wherever they can find them. Last but not least, also, the patients are smarter than ever before because they have a lot of material and education online at their disposal. They know a lot more about their health options. And also from in the rapidly developing economies of the world in Asia Pacific or in Latin America, for example, there is a lot of demand for premium procedures that up to now had been more limited to the Western, more developed economies. Looking at our ophthalmology business, that achieved about 1.6 billion revenue last fiscal year in the 23-24 fiscal year. We typically here have about 56% on the top right of the business from recurring sources, meaning consumables. I come to that on the future slide as well. Consumables and services. And roughly the business breaks down into 4 subsegments. The historical roots of the company are situated more in the chronic disease management. This is photographic imaging that leads to detection of diseases, where we are using a lot of software and also cloud integration today to achieve advanced diagnostics. Our biggest growth driver for the past 5 to 10 years has been the second area, refractive laser surgery, where we do corneal corrections to achieve a myopia correction. This is mainly a product for young people today, with interesting products hitting the market right around now that also can take on presbyopia, which comes at a more mature and advanced age. Whereas as we move on to the surgery anterior segment, we deal with patients in the cataract age, where the lens needs to be replaced in the course of cataract surgery and be changed for an intraocular lens potentially. This is typically something that affects people in the age of 60 to 70 years. Lastly, the area of surgery posterior, as we call it, or other companies might call it retinal surgery. This is something where we invested in a big way in 2023 with the acquisition of the Dutch company DORC. DORC, Dutch Ophthalmic Research Center, has really put us on the map in that business, which so up to that point had been a missing pillar of our portfolio, where our microscopes together with the vitrectomy machines from DORC can deliver a superior retinal workflow. Retinal surgery is needed often as a long-term consequence of civilizational diseases such as diabetes, high blood pressure, when the retina needs an emergency treatment in order for the eyesight to be saved. So we can really deal effectively with all kinds of eye problems affecting the entire ocular life cycle of a patient and generate a lot of disposable revenue by doing so. The other segment, the second segment responsible for about a quarter of our sales, is microsurgery. And in microsurgery, we mainly deal with visualization systems, a fancy name for surgical microscopes with a lot of add-on and intradiagnostic features, a lot of software, a lot of camera technology in them. Our biggest application field is neurosurgery and spine surgery. Here, our flagship product, Kinevo, just got a major upgrade and there's now a new product out in the market in this fiscal year 24-25 that we expect great things of. But we also don't want to neglect here the areas of ENT, ear, nose, and throat surgery, as well as plastic surgery and reconstructive surgery, and the field of dentistry, where the use of specialized surgical scopes is becoming more and more important. There is a growing instruments business and a small intraoperative radiotherapy business included here in this microsurgery field. These are growth options for us and have also the potential to generate additional recurring revenue. A smaller market, but one, I will show, that we dominate quite a bit. On the next slide here, microsurgery, there we do have a 60% market share ahead of such companies such as Leica, Olympus, and Hackstride. Zeiss is here the most specialized player, combining the haptics and kinetics of a microscope together with the specialized optics competence that we bring. And this has led us to probably by now 50-60 year kind of lead in these surgical scopes since they have first reached the market. On the top right, in chronic disease management, this is now one of the ophthalmology subsegments. We are also among the market leaders here together with some Japanese companies. Topcon is the main rival, also Nikon and Nidec, two fellow Japanese companies play a role here, but Zeiss still retains the top position, high-end position, and is the leader in digitalization and software and making smart use of the data generated in that field. On the bottom left, in refractive surgery, this is the area of corneal surgery, where we're dealing with the question of how to get rid of glasses or contact lenses for young people. Zeiss is the clear market leader with around 40% market share, ahead of Alcon or J&J. These two companies are also our main rivals in the surgery anterior segment, the business with cataract and with the intraocular lenses, where Zeiss is still with 8% more a challenger. But crucially, we have won market share over the last decade, and we have ambitions to further increase our market share here to double-digit territory and higher than 10% for the next years to come. We still have not entered all markets. We are early days in the US. We're still going to enter the Japanese market. We're still entering different categories of intraocular lenses. So the gauntlet has been laid out here for some of our rivals like Alcon, who have a longer history in that business, for Zeiss to be on the attack mode here. In surgery posterior segment, this is the retinal surgery part that I did mention. We have meaningfully strengthened our position from a very low presence through the acquisition of DORC to about a 15% market share today. The other two big players here are really Alcon and Bausch & Lomb. So just to give you here an overview of the competitive environment, how to win share, how to develop above the market as we aim to do, that is done by putting in a lot of R&D. Our R&D ratio has historically been much above the sector average, has reached almost 17% in recent years, as you can see here on the left-hand side, and is actually at somewhat of a high watermark right now, mainly through the investments in digitalization, and more on that in a little bit. But before that, I want to show you our regional presence, where one of the characteristics of our business is the strong exposure to Asia Pacific, with China being our main market, responsible for about a quarter of our sales, but also several Asian countries here like Korea, Japan, Southeast Asia region, and India among the top countries. Our number 2 market is US, and in Europe, Germany and France rank very prominently here in this group. Still, the main growth driver for us has been APAC and will likely continue to be APAC in the next years. But for some of the health problems discussed, particularly in ophthalmology, the topic of myopia among the young are very pressing, and in some areas, I will come to that, as much as 80 to 90% of the young people suffer from myopia. Our goal in all our businesses is to not only sell boxes of devices, but also to generate consumables revenue, to seek what we call recurring revenue, and therefore a very important KPI for strategy, execution, and measurements is how to how much of our total revenue is from recurring sources, such as consumables and service and software licenses. And this is now with 47% at a quite high level. The acquisition in the retinal space has helped us here also to boost that by about 4% last fiscal year. Our long-term goal is to bring it even above 50%. The ophthalmology business is already in the mid-50s. The microsurgery business still a bit earlier in that development, but also has a lot of upside if we can grow the instrument space here. So we really look forward to continuously raise that level. And over time, that should give us, on the one hand side, more profitability and better margins, but also on the other side, that could help lower the volatility of the business, stabilize the trajectory, and give us a smooth ride, hopefully, to profitable growth in the next years, not be as dependent on budgeting decisions by customers, on public funding, on interest rate levels, and those kind of factors that can impact device business and create volatility here. Two special topics on the ophthalmology market to mention. The first is the cataract market, where intraocular lenses that replace the natural lens in the case of cataract patients, quite an important growth driver. And here, in addition to the overall market trend, or the main reason why we hope we can grow above the general market trend, is that patients are more and more often choosing what we call premium intraocular lenses, or short IOLs. Premium, or some companies in our industry also call them AT, advanced technology IOLs. Some call them also presbyopia correcting IOLs. These are, simply said, all these IOLs that do not just restore your vision after cataract, but that also give you a vision correction. And the most pressing vision correction for these, on average, typically elderly people like 60 or 70 years plus, is presbyopia, which means the difficulty to read on your phone, in a book, on a screen near to you, whereas it's not so much the distance vision that is the problem with younger people. And this combination of a medically necessary surgery like cataract with a vision correction is quite attractive, because very often in most countries your health insurance will pay the mandatory base part, and you will have a somewhat more modest co-payment than if you were to not have cataract, basically, to also take care of your vision correction. So it can be cheaper to get this for the patient, to get free from glasses, even at advanced age, than having a refractive procedure. It's quite a good deal. It's quite a good value for money, as many patients perceive it, and it gives them a very good boost to their quality of life, particularly if they have a very active lifestyle at an advanced age, which is the case for many people, fortunately, nowadays. You can see on the chart here on this slide, the percentage of premium intraocular lenses is rising continuously, is projected to continue to rise every year. This is a unit share that we're showing here, which goes from 12 to 15% over a series of 5-6 years. The revenue share is a lot bigger because the prices of these advanced IOLs can be 2 to 3x on average, and in some cases even more, what the base IOLs cost, and they generate therefore a lot of revenue growth and a lot of attractive margins for the players. We're one of the big providers of these lenses, and the Zeiss brand here also works quite well with the consumer in that space. On the other eye surgical area, the refractive laser business, I already touched on the myopia in the previous presentation, but I want to show you just how drastic the myopia progression will develop according to data by ophthalmology associations here. From 2000 to 2050, the world population will reach a level of almost half of it having some level of myopia, and almost 10% having severe myopia. And severe myopia is a pretty good proxy for people who want to get rid of glasses or of contact lenses in the long term, who are often entertaining having a surgery to get free from that and to improve their quality of life. And particularly among the young academics, the problems are exacerbated by lifestyle factors such as not spending enough time in outdoors, in natural sunlight, getting a lot of blue light exposures from screens and devices. High cell phone and screen usage among young people can be a problem, as well as other factors that differ a bit between geographic regions. So in Asia Pacific, we see that the myopia rates are already a lot higher today, but they are rising everywhere. So some of these lifestyle habits affect really every region and culture. And therefore, we can expect that the demand for refractive surgery will continue to increase and increase. So it's definitely a good business to be having a technologically very strong position in for Zeiss right now. Looking very briefly at our overall portfolio, we are also, with our combination of surgical imaging, surgical and diagnostic imaging solutions, the most complete offering in the industry. Our traditional rivals like Alcon J&J, B&L on the surgical side, and Topcon on Nidec or Hark Stride, which are more on the diagnostic imaging side. These are more typically rooted more strongly in the one camp, diagnostics, or in the other, surgical applications and consumables. Zeiss really has it all, and that allows us to be a platform provider to develop very unique integrated suites of devices and software and consumables that can create extra value for the patients. And to give you a bit of a glimpse into our strategy, how to do that, I will show you this concept of the devices and leading to workflows. Typically start the presence at the customer with an equipment and so-called anchor product. That can be a surgical microscope, for instance, like the Knivo 900 in microsurgery, or an eye surgical microscope like the Artivo, the new digital microscope that we recently introduced. Together with a selection of instruments and consumables, it can lead to a workplace. In a workplace, we combine one or several devices together with the level of instruments and consumables usage. These solutions can also be bundled and purchased as a package. And then in the most mature stage of our customer offering, we achieve what we call a workflow. A workflow for us means basically that from the pre-surgical area, the diagnostics and the planning, through the surgical application, at each step of the procedure, a Zeiss device and Zeiss consumables are being used, and some kind of Zeiss software backbone and data backbone underlies the whole thing, so that cloud data can be generated continuously to improve upon the efficiency and the quality of that procedure. So ideally, we achieve the best surgical quality. We achieve also low cost because complications are minimized, and we can sell various devices, some non-recurring and some recurring in the process. And this is our ambition. It is ambitious. Nobody else in the industry has such a strategy, and nobody has all the bits and pieces in place like we do to develop it. Of course, there's still work to do. We're not uniformly at our goal across different disease patterns, but we're working very hard. And if you put your, if you dig deeper into this, you see the many growth options that still rise to make us a much bigger company with a very high customer loyalty and retention, and an even higher ratio of recurring revenue than what we have now. If we look at two examples really quickly, I won't go into any details here, but in cataract, it's one of the areas where we're the farthest along in developing this workflow strategy. It's where we have with the cataract workflow already pieces for the assessment, the education, the planning, the treatment phase, and the aftercare, the checkup phase. Basically, we can do it all. Software from Zeiss, diagnostic imaging from Zeiss, surgical instruments, devices, and consumables from Zeiss, and also all the setup for the aftercare of patients and we're developing something similar in the retinal world right now. In microsurgery, we have an interesting application that is similar in tumor care, in the care for very terrible tumors like glioblastoma on the brain, where we can actually put radiation onto the tumors during the resection surgery on the tumor bed after the main tissue has been removed, thereby give the patient a better chance to have a higher time of survival after this first procedure. We can also do a very innovative digital biopsy, where we can increase the efficiency by not needing to send tissue samples to the lab, but to analyze them with a sophisticated digital photography method and get a really accurate and reliable diagnosis if the tissue cell has cancerous cells in it or not, within minutes of doing the procedure. That brings me to the last slide, the outlook for fiscal year 24-25, and I'll take the opportunity to also address some current trends. At the beginning of fiscal year 24-25, when we're recording this, we have some uncertainties in the macro environment. Still, after a year 23-24, in which our sales and earnings were under some pressure, We expect a turnaround. We expect to recover with our EBITA and EBITA margin again to better levels compared to the past 2 years where we had been under some pressure in our profitability, helped by new products. Still, however, the amount and speed of that recovery is somewhat dependent on the macro conditions, and these are difficult at the moment with restrictive investment climate for a mix of political and economic reasons, also high interest rate environments around the world. Our especially high exposure to the Asia-Pacific region is not super helpful in the short term, as our biggest market, China, is suffering through a somewhat low consumer climate right now. So these are some reasons for near term not promising an exact specific level, but we are confident that there can be some recovery in growth and some recovery in margin during the fiscal year 24-25. While the macro environment is tough, we are continuing on some cost containment measures. We call it a resilience program, where we are trying to manage our expense ratios at a moderate and appropriate level. After some years, as I've shown you, of raising the R&D ratio, we would like to consolidate it and maybe bring it back down slightly relative to revenue, if not maybe in absolute terms, and to still develop growth by launching new products such as the KINEVO 900S in microsurgery and the VISUMAX 800, our newest laser platform in refractive surgery, which still has not arrived yet in our main markets, China and the US, but where we're expecting the approval during this fiscal year. And for the subsequent years, return in our planning to a steady, slowly but steady recovery in the margin up to a target level that should be, in terms of EBITA margin, in the neighborhood of 16 to 20%, whereas the lower area of that range is reflecting more the cautious and difficult macro climate that we see right now. And the higher end of that range, closer to 20, reflects more the kind of neutral to somewhat positive macro environments that we've been seeing in the late 2010s and early 2020s. I think this is a significant upside from where we have been at in the years 23 and 24. And within the current year, that turnaround is expected to show itself. As we move through the year, we will still have a somewhat slower start due to some specific factors dealing with the weakness in China and the launch trajectory for the new products. But we will pick up speed as the year progresses, and probably in Q2 and Q3 and throughout the rest of the year generate additional growth and make that turnaround a steady thing. And hopefully the years after that will confirm this trend. So this is the outlook right now. Let's see how it goes and be in touch during the course of the year. I hope this has generated some interest in our company, and we are, of course, available for discussions with you who are watching this, and hope to see you and talk to you and be in touch. And thank you for your interest and for your support of Carl Zeiss Meditec.
Disclaimer. As described in the legal section on our website, c11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. C11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.